One way that crypto is going mainstream is through all different types of new investment vehicles, namely ETFs. So to chat more about Bitcoin ETFs and the future that we should expect going ahead, let's bring in Michael Sonnenshein, the CEO of Grayscale Investments. So it's first of all, it's great to have you in person. We are here in Brooklyn. It's a beautiful day.
Thank you for having me. Great to be here.
So let's kind of start off about your flagship product, that is your Grayscale Bitcoin Trust. Broadly, though, it's been getting a lot of attention because it was obviously there in the space early, but now there's a lot of interest in these Bitcoin futures ETFs, which has kind of underscored the hunger for new types of investment vehicles to get exposure to Bitcoin. Tell us a little bit about the kind of aerial view, if you will, of the demand for different ways to get exposure to crypto products.
Yeah, this is many, many years in the making. So our flagship fund, the Grayscale Bitcoin Trust, trades under symbol GBTC. This is the largest Bitcoin investment vehicle in the world. It holds about 3.5% of the outstanding Bitcoin supply. And so we have been working proactively with regulators all the way back to 2016 to convert the product into an ETF. And so what's been really encouraging to see from our seat is that regulators have now really paid a lot more attention to the asset class. We've seen the approval of a Bitcoin futures ETF, but we still don't yet have that Bitcoin spot ETF, right? And so it's been very interesting to watch in the market how investors have been digesting this. We're paying attention to the performance of Bitcoin, the performance of the Bitcoin futures products, and actually the outperformance of GBTC compared to some of those. And so there's a real compelling case amongst investors to have that spot exposure. And I think that's important for them because they're recognizing that there are roll costs and all kinds of other things. So when we talk to regulators, it's important that they keep that playing field level and let investors choose between futures and spot.
So let's kind of unpack that, though, because It was interesting to see a lot of the media reporting when we got that first ProShares Bitcoin futures ETF, and people were describing it as the Bitcoin ETF is here, right? But it's not quite a Bitcoin ETF, right? A Bitcoin futures ETF is pinned to those contracts that are traded on the Chicago Mercantile Exchange, whereas what you're describing with spot would be underlying exposure to Bitcoin itself, or what some people call physical.
Sure.
What's the importance in the delineation between those two types of things?
Well, I think what we've typically seen for commodity-based ETFs is when the underlying commodity is easily stored, something like gold, for example, you've seen investors gravitate towards the product that physically holds that commodity, even though there are derivative products, futures-based products. So in the case of Bitcoin, because again, it is able to be physically stored quite easily, the physical ETF is really where investors have, tried to go towards because you do have to think about costs as an investor. Owning an ETF that has future contracts underlying it means that as they come up for expiration, there's going to be costs to the fund that are going to make their way back to investors that are going to impact their investment. And so again, from a regulator's perspective, it's important to give them both the opportunity to decide between futures or spot.
So let's kind of take a big step back also and just recognize that the regulatory future for a Bitcoin spot ETF is still a bit unclear right now. And in fact, we did speak with SEC Chair Gary Gensler 2 weeks ago about the prospects of a spot ETF after, at that point in time, futures ETFs had already started trading. Take a listen to what he said to Yahoo Finance a few weeks ago.
Brian, you can imagine I'm not going to speak to any individual filings that might be in front of us or prejudge anything. But I think that the concern for the investing public is the crypto asset space, $2.5 trillion. Most of it has not come within an investor protection remit. And thus, investors aren't protected the way they are, whether they go into the stock or bond markets that we've overseen for so long. Without that, I think that it really is, as I've said to others, a bit of the Wild West.
A bit of the Wild West. And he's used that language before, but when you see the Securities and Exchange Commission chair saying something like that, and again, he wasn't saying I'm going to comment on any individual application, including Grayscale's.
Sure.
Do you read that as a positive or a negative development? Because it sounds like there's still some skepticism from him about the underlying issue from the SEC's remit, which is investor protection.
It's an important distinction to be had here because what we've seen come out of the agency over the last few years is really just concern over the underlying Bitcoin market. Things like pricing, manipulation, regulated markets of significant size. And what the industry is telling the regulator here is that if you're comfortable with the derivatives, right, we now have a Bitcoin futures-based ETF, and those futures contracts are deriving their pricing from the spot market itself, then you're inherently also saying you're comfortable with the spot market. So I think as we continue to engage with the regulatory community, it's important that we drive home that narrative and distinction. And importantly, this is not just about the investment community now. This has also become a bit of a political issue. In the last week, we've actually seen bipartisan support for a Bitcoin spot ETF from Emmer and Soto submitting a letter to the chair actually advocating for this and ensuring, again, that there is a level playing field amongst these applications out there and that investors really do have the optionality.
So let's zoom out and talk about the ETF space. Arguably, a space that's just as hot as crypto is ETFs. People just want these types of products across the board. Obviously, when it comes to Grayscale, it's not just that Bitcoin Trust or Bitcoin Trust product that you offer, but you also have this Future of Finance ETF that you've launched. So tell us about the popularity of ETFs. Why do you think that these types of investment vehicles, these passively run ETF products, have become so hot over the last 2 to 3 years?
Well, I think many investors are really thinking through the lens of thematic investing these days. And so when they think about building out diversified portfolios, what kind of exposure they want, when there is that familiar ETF wrapper and it has the protections that it does, investors gravitate towards it because it alleviates the need for them to compile their own investments and instead get that thematic exposure. In the case of the Grayscale Future of Finance ETF, there we've tried to really carve out a new niche within the market where we're really trying to advocate for companies that would in theory be in this fund if and when it launches that really are at the intersection of technology, financial services, and digital assets, really focusing on infrastructure and plumbing that is going to unlock a lot of the opportunities that both we are excited about as well as certainly our investors are as well.
There are a lot of ETFs out there, though, right? So how do you carve that space out in a place that hasn't already been carved out? There's a lot of, you see ARK Invest, for example, getting into certain types of ETFs that they want to keep as thematic as well. Is it difficult to try to carve that out? And especially because these types of vehicles are by nature passively managed, well, a lot of these ETFs at least, does that make it difficult to message to prospective investors that, hey, this is what Grayscale is doing, this is what makes us different from everyone else?
Well, a lot of what we're doing with the Future of Finance filing is really trying to meet rising investor demand. Investors at Grayscale clearly are already allocating to digital assets themselves, and so they often think, where else do they need to have exposure if they really want to double down on this industry and its continued growth? And a lot of that comes back to infrastructure and plumbing that's really going to allow that connectivity to take place.
People love talking about plumbing. I want to switch gears now to the metaverse, of course. Big news, obviously, out of Facebook. But, I mean, this is important because it seems like the definition of stake and ownership is going to change with this metaverse coming out, right? Crypto and other types of these types of decentralized platforms will allow people to take ownership once the metaverse comes out. How important is that going to be? I mean, not to say that's the reason why Bitcoin is over $67,000, right?
Sure.
But it does have some connection. How does Grayscale think about the opportunity and what could be this next wave of the internet?
Okay, so I really appreciate the question. This is going to need a little bit of time, so bear with me, okay?
We got plenty.
About 6-7 years ago, the word blockchain was being thrown around without people really having a fundamental understanding of what the technology actually was or what its use cases would be. And here we are today, and blockchain is certainly a colloquial word that's being used, right? You fast forward to what we've seen over the last few weeks and months, and all of a sudden the word metaverse is being tossed around quite a bit. We're even seeing companies changing their names to advocate for or indicate that they're moving towards supporting metaverse applications. At its core, a metaverse is where digital experiences take place. And to understand why there's so much excitement around this, I think it's important to reverse the clock and go back to the layers of the internet. So if you go back to the Web 1.0, and this has been built up over decades, you really saw the emergence of, for the first time, a read-only digital interface where we could get information. You didn't have to go to
rack back.
Right. You didn't need to go to the library anymore. You didn't need to read a book or pick up an encyclopedia. That then was dragged forward into the Web 2.0 that not only allowed us to have that read-only experience, but then connected everybody through e-commerce, through social media networks, things that we're using today and that we, quite frankly, can't imagine our lives without. But what's important to think about there is that all the value exchange that was taking place in the Web 2.0 was still causing us to rely on those social media networks, those e-commerce giants. What we're now seeing as we move to the Web 3.0 and are maybe just on the dawn of the Web 3.0 is that that value is actually being returned to the individuals and users within this digital economy. And so when you think about the idea of a metaverse, let's just suspend belief for 1 second, okay? Imagine that you can go to a concert without leaving your couch. Imagine you own land that you will never set foot on, but that has material value. These are the types of digital experiences that metaverse applications unlock. And we're now seeing a lot of the confluence of gaming, virtual reality, and social media networks converging around these ideas. And there are a lot of really exciting applications out there. We've long been believers in Decentraland, which is a decentralized metaverse. It has a native token called Mana. So these are the types of applications where we're starting to see user adoption and growth. But again, very, very early days for it.
So just to be clear, you're not going to change your name, though, to Meta, Grayscale, or anything like that? Not right now? No announcement you'd like to share with the crowd?
I wouldn't say never, but not at the moment.
Everyone heard that, right? Now, I want to ask, though, because it's interesting, you talk about decentralized, right? There are, obviously, it's not just one. It's not like Facebook is the only one creating a metaverse. But if it is indeed the case that it's going to be these big companies driving a lot of this, doesn't that kind of represent the antithesis of all of this, that it'll be a large social media company having a lot of ownership of all of this, and that, yeah, you can have pieces of share ownership through maybe some of these types of decentralized finance related platforms or cryptocurrencies and what have you, that it's still going to be controlled by the big guys, though?
It remains to be seen. And I think that's what's potentially so disruptive about decentralized metaverse applications. There philosophically is going to be a disconnect whether or not individuals and users want their metaverse experiences captured, recorded, and monetized by these centralized platforms, or if in fact those experiences are going to move to more decentralized applications where, again, that value and the experience and what's owned is really back in the hands of the individual.
So what's interesting is that, Grayscale Investments, right? I guess it's not like you're going to have a Grayscale Investments theme park or something like that in the metaverse. So how can Grayscale Investments, from the business model that you have now, scale up to take advantage of all the opportunities that you just described?
Well, I think today we've seen strong receptivity in the Grayscale Decentraland Trust. So what's interesting about some of these decentralized metaverse applications is that they have a native currency. So it creates this really interesting feedback mechanism where individuals can not only receive the native currency of the application as they're providing goods and services in the metaverse, but they can also turn around and use that native currency within the metaverse as well. And so, for example, Decentraland has its own native currency, Mana. And so that is one way that investors could think about putting some money to work in an asset that is going to, potentially appreciate with the rise of a metaverse like Decentraland itself. And so that's just one of several applications. And we're always, scouring the landscape looking for other assets that we can also bring to our investors.
Okay, so just for people whose brains are melting a little bit, because mine certainly is right now. So does that mean that there could be a Grayscale Investments ETF pegged to Mana, a la whatever the RuneScape currency was back in the day? It would be a product that you would offer that would be pegged to those types of currencies that are available in these gaming or metaverse experiences?
Yeah, so we already offer the Grayscale Decentraland Trust. So today investors can buy into the trust itself and it gives them passive exposure to Mana. But that's not to say that we won't continue to look for other metaverse opportunities to bring to investors as well.
Okay, so let's kind of talk about the competition then in this space, right? I mean, the metaverse is something that people have been talking about for some time. Of course, it kind of exploded when we saw Mark Zuckerberg have that keynote not long ago. But is there a lot of competition in this space? Do you feel like you're a first mover already, or do you feel like there is still kind of room to play around with other types of providers as well?
I think the rising tide lifts all boats. I think that if you had asked me 18 months ago if we would have seen, Fortune 500 companies holding Bitcoin on their balance sheet, I would have told you, Brian, that would be amazing, but it's probably not going to happen. And, here we are today, and those types of things are a reality. We wouldn't have necessarily seen entire nation states declaring Bitcoin as legal tender. And so when I think about all the different ways that we're seeing adoption and growth, whether it is other asset managers, whether it is some of that plumbing and infrastructure, we're truly still at such an early stage for the growth and development of this asset class that from our seat, we welcome more and more people into this community to spread awareness, make sure the right information is getting into the hands of investors, and that any preconceived notions are really cleared up.
That's a really nice segue as we kind of start to come around full circle, because the metaverse is a little bit out there. But coming to just the broad crypto space, volatility, right? As someone that is watching the space very closely to see what the investor demand is, there's still a considerable amount of volatility, not just in Bitcoin, but in other types of cryptocurrencies as well that we've seen emerge. So do you feel like things have kind of calmed down in the crypto space? It's a little bit easier from a financial standpoint to figure out what is the true value of something, or is it still pretty difficult?
I think volatility has been inherent to the asset class, since the beginning and is still very much alive and well today. I think what certainly has changed, though, and has also been a catalyst to draw more investment into the asset class, is today that we have the healthiest two-sided market we've ever had before. That's not only because we now have derivatives, we have borrowing and lending. These are the types of tools that investors are used to having at their disposal when they think about accessing an asset class. And if we look back 4 or 5 years ago, those just weren't absent. Those were completely absent, rather, from the asset class. And so today, the emergence of those tools are really, really important, and I think can help to dampen volatility. But nonetheless, the investors who are actioning investment today are doing so knowing full and well that crypto and their investments are inherently going to have volatility associated with them.
And we're about to come full circle back to Bitcoin ETFs. Do you feel like there's any impact on liquidity from a Bitcoin ETF somewhere down the line? Because we've seen that as issues in commodities ETFs in the past, where it's been the case that one holder has a lot of the commodity that's being held in that ETF. That's affected the price itself. Is there any concern about that for some of these crypto ETFs?
I think that certainly the popularity and usage of GBTC, which I think would probably be the closest proxy today for an ETF, although it is not one, would definitely demonstrate that there is certainly an investor use case for a Bitcoin spot ETF. That being said, based on the work that my team does, investor sentiment studies that we do every year, there is still an important cohort of investors that is waiting on the sidelines before they'll get invested until they have the protections and familiarity of an ETF wrapper. So we are certainly of the belief that a Bitcoin ETF could be a material catalyst to draw in more investors and more capital.
So last question here. What is the big picture future for investment in the crypto space? We're not talking about Bitcoin ETFs. We're not talking about Bitcoin futures ETFs. When you look 5, 6 years down the line, you expect Bitcoin spot ETFs to be part of that picture, and what other types of things?
Well, it's tough to say what will exactly be a part of that picture. I think instead, where we think, and it's hard to associate a timeline with it, is that a lot of the things that exist today, many of them will fizzle out. Over time, the barriers to entry to create new digital currencies has lowered so much that we now have thousands upon thousands of digital currencies. And so it's conceivable to think that as this asset class matures, that investment will center around a handful of currencies, each with distinguishable markets and use cases and prices, but not a world in which there are thousands upon thousands of digital currencies.
All right. Michael Sonnenshein, CEO of Grayscale Investments. At least that's what it's called for right now. Thanks again for hopping on Yahoo Finance.
Thank you.
This morning.